Hello friends, in the series on the income tax cases, today we will discuss a very important case. The name of the case is ORIPOL Industries Limited versus Joint Commissioner of Income Tax and others. This case has been reported in 451 ITR at page number 379 and the matter has been decided by ORISSA High Court. The date of the judgment is 12th May 2022 and the matter relates to the assessment year 2010-11. In this case, the assessee was a limited company. The assessee was dealing in the services of iron ore fines. This was a technical product. To reduce the profits and to reduce the tax liability, the assessee paid commission to 3 directors and 4 relatives of the directors. During the assessment proceedings, the assessing officer inquired about the justification of this commission, inquired about the expertise of the commission agents who have provided the services to the assessee and in return got the commission. It was the point of the assessee that this commission has been given for the iron ore fines procurement and related services. When the assessee was inquired about the expertise of the commission agents, the assessee was not able to document that, to give the proper evidence regarding that, and the assessing officer disallowed the commission which has been paid to the directors and to the relatives. Apart from this, there was some other commission also paid to some other persons, but that was not disallowed. It means that the assessing officer didn't disallow all the commission, but what the assessing officer feels that it was an adjustment, that commission was disallowed. This commission was paid at the rate of 1.35% and the amount of the commission was substantial. This matter went to the CIT appeal, ITAT and ultimately to the High Court. And the High Court also said that the assessee was not able to prove the genuineness of the expenses, to prove that this commission has been paid wholly and exclusively for the purpose of the business. It was the plea of the assessee that we have deducted the TDS and TDS is reflecting in the 26 AS of all the commission agents. So the court said that deducting the TDS for paying the commission is not sufficient to prove the genuineness of the expenses. Other circumstantial evidence should also be provided and the expertise of the commission agents should be brought on record to justify the payment of the commission expenses. And ultimately the High Court also didn't give relief to the assessee. Here my point is that what is the takeaway from this case, that we should avoid from any practice of booking the bogus commission expenses, because when this type of disallowances are there even at the level of the High Court, even the company on which these commission expenses have been disallowed have to pay the taxes, have to pay the interest and then penalty, and the payment of commission to whom has been made, they are also bearing the tax burden. So in that case there is a double taxation, but because the company has involved itself into malpractice, then there should be some other penalties also on the assessee. So these type of practice should be avoided and the bogus expenses should not be booked, because earlier the government was very strict as far as the balance sheet items are concerned, like acquiring share capital, acquiring loans from NBFC companies and unscrupulous entities, and now the department has every information through the detailed profit and loss account information available, which we are giving in the form of income tax returns, and they have the very specific information that this company is incurring this much of the expense on these items. So we should not indulge ourselves in these type of practices, because if we are not able to document our expenses, then there are very weak chances that we can get the relief. At the end of this video, once again, I am repeating the name of the case. The name of the case is ORIPOL Industries Limited versus Joint Commissioner of Income Tax and others. And this case has been reported in 451 ITR 379. The matter has been decided by Orissa High Court and the date of the judgment is 12th May 2022.